Hello, good morning, everyone. So welcome to our daily briefing today. So today is 29th September, which is Wednesday. Good day, all of you. So let us start our briefing by taking a recap on previous important economic data. So the first one is Germany GfK consumer confidence October. So the previous is negative 1.1. The forecast is negative 1.6 and the actual is 0.3. So we can see that the actual is slightly higher than the forecast and previous. And this is a good news for euro dollar. And then we go to the next one. It's US Conference Board Consumer Confidence September. So the previous is 115.2. The forecast is 114.5 and the actual is 109.3, which is lower than the forecast and previous. So this is not really a good news for US dollar. But we take a look on the market graph here. We can see that the US dollar rise up last night instead of fell down, right? So we can see that this rise up is not because of the important economic data. It's because of the US bond yields. Okay, so then we go back to our PowerPoint here. So the next part is previous day market volatility recap for gold. It declined 260 pips last night. So what happened? Let us read the factor here. The price of gold fell on Tuesday. Spot gold fell by more than 1% at one time. So setting a new low since August 11 to 1728.19 US dollar per ounce. The dollar US dollar strengthened as the market expected the Fed to rise interest rates earlier than expected and US bond yields soar. So this is the main reason why the gold fell down last night. Then we go to the next one, the next market volatility recap for WTI crude oil. It declined 200 pips last night. So what happened for the oil prices? So we take a look at the factor here. So with the cooling of market risk appetite, oil prices dropped sharply. Both US oil and Brent oil fell together for more than 1% in late trading. API data show that US crude oil inventories increased by 4.127 million barrels last week, and the increase in inventories far exceeded market expectations. So it means what? The inventory is getting more and more, means the market demand is getting lower. So that's why the crude oil price went down, okay, fell down last night. So this is the reason. Then we go to the third one is GBP USD. It's declined 190 pips. So what happened? Why it has a big market volatility last night for GBP US dollar? So let's take a look. Okay, so the US dollar rose against all other G10 currencies on Tuesday, pushing the US dollar index to its highest level since November last year. The S&P 500 index hit its biggest decline since May, and US Treasury yields rose for the fourth consecutive day. The pound fell the most, hitting its lowest level against the dollar since January. The pound fell 1.18% against the dollar, late to 1.3537. So the main reason is the US bond yields again. Okay, US Treasury yields rose. Okay, and the US dollar index rose. So that's why the GBP USD fell down last night. So that's the reason. Okay, so we go to the next part is when it comes to today, which important economic data or speeches we have to focus for today for in the market today. So let us take a look on the US session. In today, we have to focus on this economic data, which is US EIA crude oil stocks change, 24th September. So, but there are a few speeches we have to focus, okay, because why? Because there are the big bosses that are going to have a speech tonight, and they are talk about what? The Fed chair talk about the US dollar, right? And the Bank of England government Bailey, okay, the Andrew Bailey talk about the pound, and the ECB Euro Central Bank talk about the President Rajat talk about the euro dollar. So if any one of your clients they are trading any instrument regarding a US dollar, pound, and euro dollar, they have to focus at this time, 10:45 and 11:45. Okay, so remember. So we go to the important economic data, which is US EIA crude oil stocks change, 24th September. Previous is negative 3.481 million, and the forecast is negative 2.33 million. So the data release time is at 10:30 tonight. So if the increase in crude inventories is more than expected, it implies weaker demand and is bearish for crude prices. So if the increase in crude is less than expected, it implies greater demand and is bullish for crude prices. Okay, then we go to the last part of our briefing today. So it's the market update for gold. Now for gold, resistance level of today is 1744 and support level of today is 1724. My personal opinion, I will still take it as a bearish for so many days. Okay, so today we still continue bearish. So why? Because the US dollar index surged to a high in more than 10 months on Tuesday, following the upward trend in US Treasury yields, as investors expected the Fed to announce in November that it would start to reduce bond asset purchases and may rise interest rates thereafter. So this is the reason why the US dollar going strong. So that's the reason, and this is not really good for the gold prices, right? Okay, so the gold price bears are still strong, as we can see that there's a big trend and still going strong, going bear. Okay, bear still going strong. I mean, still downward trend. Okay, so and the market outlook may continue to fall, which may challenge the important support level of 1700. So we look for these prices. Okay, then and the bulls are advised to leave the market temporarily to wait and see. Okay, so continue to pay attention to the speeches of many officials of the Federal Reserve, so including Chairman Powell, who will also make an appearance. So for tonight, 10:45 is very important, and also 11:45. Okay, so we take a look on the market graph here. So if the gold prices fell down to the support level here, 1724. So if it broke down, okay, I mean, if break down the support level 1 here, then we will look for further downside to 1714 as the S2. So if the price go up above, break through this one pivot 1744, which is the resistance level, then we will look for further upside for 1754. So that's all for our briefing today, and wish you have a good day and see you again. Bye bye.